What's going on, y'all? In today's video, we're going to be talking about how I use ICT concepts. And if you aren't familiar with who ICT is, that just stands for Inner Circle Trader. It's actually my mentor, Michael Huddleston. So research him on YouTube if you haven't seen any of his stuff already. Hands down, in my opinion, he knows the most about the market, so I trust him the most with his opinions and the things that he shares. So in today's video, I want to cover how I actually use his concepts. And if you don't know who I am, my name's Jeffrey Rodriguez, founder of J-Rod Forex. I'm a full-time trader and an entrepreneur. Unlike most channels, I have absolutely nothing to sell you. My goal with these videos is just to bring you guys my experience and hopefully shortcut the learning curve a bit for you guys, so ultimately you can become profitable traders and live the life you want to live sooner. As I mentioned, I would definitely recommend checking out ICT's YouTube channel if you haven't already seen that. He has a series on there called the 2022 YouTube Mentorship. Highly recommend going through that. It's the simplest approach to trading I've ever seen, and it's something I personally use in my trading as well with my trading plan. Today I wanted to talk to you guys about the main ICT concepts that I use, which are fair value gaps, breakers, bullish order blocks, and market maker sell models and market maker buy models. So those are essentially the core foundational components of ICT concepts that I use in my personal trading plan. I wanted to spend some time and actually dive into the charts and show you guys what these things actually look like. That way, hopefully you can start to train your eyes so you can start to find these things on your own. So let's go ahead and dive in. And the first thing I wanted to talk about is a fair value gap. Again, just to preface, I would highly recommend going through ICT's 2022 YouTube mentorship where he covers all of this stuff in immersive detail. But just in summary, basically what a fair value gap is, it's essentially a gap between candlesticks. So let me go ahead and draw a few of them out and show you what this actually looks like. So let me find my rectangle, and right here is a fair value gap. So this was from today's trading in NASDAQ. This is the NASDAQ futures contract for March 2023. And you guys can see this is a fair value gap. So essentially how you can identify these is you're looking for a series of 3 candles. And what you're looking for is that middle candle in the series of 3 typically is going to have some sort of gap. And what I mean by gap is if you look at the wicks, meaning the highs and the lows, they do not touch. So there is an area in between there where ICT deems this as an inefficiency. So the market will likely have to trade back into this to accumulate more orders before, in this case, let's say it continues higher. So this would be an example of a bullish fair value gap. And then if you look over here to the left, you can see that we have these 3 down candles here. And this would be classified as a bearish fair value gap. So typically when I'm marking these levels on my charts, one thing that I like to do is I like to change the colors so I can identify them on the lower time frames as well. So in this example, you can see I've got my bearish fair value gap. I like to use this light kind of red pink color. And that's how I can identify that this is a bearish fair value gap, which in my trading plan, this would be an area of resistance, for example. And this would be an area of support. And again, the bullish fair value gap, I use this one in like a light blue type of color, just so I can delineate on the lower time frames what this actually is. On this current chart, we're on an hourly time frame. So each candle represents 1 hour in time. So keep in mind when I drop into the lower time frames, like a 15-minute, it may not look exactly the same, right? So you can see there's more candles in here because, again, we were on the hourly. Same thing over here. The actual fair value gap may not align perfectly on the lower time frames, but if we zoom back out to the hourly, you can see that it is, in fact, a fair value gap on the hourly time frame. So I use these levels on the lower time frames for either targets or potential entry opportunities. So hopefully that makes a ton of sense in terms of fair value gaps. I would highly recommend checking out ICT's training on this, as he's the creator of all this stuff and he can explain it 10 times better than I probably could. I personally use these things, so I have a lot of experience identifying what they look like, when they're going to form, all that stuff. But again, in terms of the overall concept in and of itself, ICT can give you the best possible explanation because, again, he is the creator of this. So that's one of them, is the fair value gap. Another one would be a bullish or a bearish breaker. So basically what that is you're looking for a pattern in price. That's how I like to think of it. So for example, you can see here we have a move lower, market trades back up, it forms a lower high point, and then we trade lower, forming a lower low. And then the market rejection goes all the way back to the upside. So this up candle before this down move would be considered a bullish breaker. So I would actually draw this out similar to how I do my bullish fair value gap. I would draw this out like that, and I would go ahead and make it a light blue color. And then if I wanted to, I may actually go in and add some text and just put bullish breaker. That way, if I'm on the lower time frame, again, like a 15-minute, I'll see that it says bullish breaker, right? If I wanted to get more specific, I could put hourly bullish breaker, which would also help identifying these things on a lower time frame. Again, if you're relatively new to trading, you may want to write some text so you actually know what these levels are. But personally, my eye is pretty trained to know, if I have a certain color or a certain size width on the lines and things like that, I'm pretty clear on what that level would be. So that's an example of a bullish breaker. The inverse is true for a bearish breaker. So in the series where you have a low and then a lower high and then a lower low, you would be looking for the inverse for a bearish breaker. So let's go ahead and zoom in, and I want to show you guys an example of a bearish breaker now. So again, we're still on NASDAQ futures for March 2023. I'm going to go ahead and zoom into the price action here on December 14th, which was Wednesday. So again, for this pattern, we're looking for the inverse of what the bullish breaker would be. So in that previous example, we seen a high that formed, then a low, then a lower high, and then a lower low. After that lower low, market traded back up to the upside. So again, we can just kind of zoom out so I can show you guys this visually one more time before we dive into the bearish example. You can see we've got high, low, lower high, lower low, market closes above it, and then we've got the bullish breaker. We trade back into that and we expand higher. All right. So again, we're looking for the inverse now when it comes to a bearish breaker. So if we go here on the 14th, you guys will see that we have a low, a high, a higher low, a higher high, and then the market rejects, making a lower low. So basically what that means is the down candle before the move up is going to be your bearish breaker. So we're going to go ahead and draw this one out, and we're going to expand this. So this is your bearish breaker. Again, this is 12 noon Wednesday, December 14th, 2022. So you can see low, high, higher low, higher high, and then the market sells off. So only when this candle forms, which is at the 2 o'clock hour Eastern time, so when this low forms, you can watch this level as a potential entry point. Again, this is the bearish breaker. So the market pushes up into that, closes below it, and then we continue to sell off. So we'll zoom out just so you guys can see. All right. You can also see there's an example of it. Actually, this isn't really a true example because there's no swing, there's no higher low point in here. So we wouldn't actually consider that a bearish breaker. Just seeing if I see any other examples that I could show you guys really quickly. Actually, yeah, right here. So you can see here we've got a low, high, higher low, higher high. Really, you could use this high, right? And then you could use this candle, or you could use this candle as a bearish breaker. So watch this. If we highlight this bearish breaker here and we draw this out in time, boop, look at that. So bearish breaker, when this candle sells off, at that point in time, are you looking at this as a potential entry opportunity? Notice the immediate next candle tries to get up into it, but it misses it. So you may have missed your entry opportunity here, but that's okay because let's see, what is this? The 19th. And so 2 days later, you actually get the entry. But they give you another one actually 3 days later as well. So 2 or 3 days later, you could see there's an entry opportunity here, 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 here. And those are pretty much all the opportunities. So you have 1, 2, 3, 4, 5, 6. 6 opportunities that span out. That gives you plenty of time to get on board and then look at that rejection from there. So again, those are your bearish breakers. and you've got your bullish breakers, which this is the example of that one down here. You got your bullish fair value gap. You also have your bearish fair value gap. Now let's go ahead and talk about bullish and bearish order blocks. So that is similar to a breaker, but essentially how I identify these is I'm looking for, in the example of a bullish order block, I'm looking for a series of down candles before a move up. So for example, I would actually consider this candle here a bullish order block. Again, I would refer to ICT's training for all of this stuff because he can go a lot more in depth than I could, but from my personal experience, I would deem this a bullish order block. And the reason for that is a low was formed, the market traded up, failed to come much deeper back into that. We continued to run a bit higher. And then when we rejected here, I would expect this to hold as support because the liquidity was already taken on this low. So I would expect this level to hold at least for a bit to get some sort of continuation higher, at least above this initial high, right? So let's say, for example, you went long here, you took your partials here, you're done. And that spans out over 5, 6, 7, 8 hours or so into a new day. But again, not much time at all if you would have held this trade. And if you map it out in terms of risk to reward, just draw that on here real quick. Let's say you enter at the top, your stop loss would be below that low, and your target would be at this high. So this in and of itself is a 3 to 1, so 3.6 to 1 really. Very low risk, and you could see pretty nice profit. Ultimately, this would have been a solid trade off of a bullish order block. So I would really study these a lot more in detail because there's a lot of specifics that come with bullish and bearish order blocks. But for me personally, that's one that I would consider a bullish order block. Now, other people may not consider this a bullish order block, right? That may not be trained, that may not be visible to their eye. But for me, I would consider that a bullish order block. And if I was in front of the charts during this day at this time, this would have been a potential trade opportunity I would have been looking at. All right, moving on, I wanted to show you guys another example of a bullish order block so you can see that we actually have one here as well. So these two series of down candles, even better, it forms within a bullish breaker. So there's multiple things overlapping, giving you confluence that this is likely going to be a pretty strong level. So if we go ahead and map out, you could do the high to the low, which the market trades into it, right? Or if you wanted to do the bodies, you wouldn't have had an entry on this one, right? Because the market never comes back down there. Now tomorrow it could drop back into that and you could go long there potentially, but if you're using the bodies as your bullish order block, you would have missed that entry there. But let's say you use the entire high to low wick, which this isn't something I use. I don't use the wicks. I usually just use the bodies. After the market breaks above it, retrade back into it, expands higher. So those are your bullish order blocks. Now let's take a look at a bearish order block. Actually, overlapping with our bearish breaker previously here, you could use this up candle or even this up candle here as a bearish order block. And the reason that you would consider that a bearish order block is because it is an up candle before a down move that also made new lows. So if we can go ahead and highlight that, you can see at this one we have a bearish order block overlapping with a bearish breaker. And again, you would expect price to hold within that. So that's your bearish order block there. You also have another example right here to the left of it, where you can see this bearish order block here. Bearish order block before a lower low is formed, market trades up into that, sells off, leaving a bearish order block here as well as a bearish breaker, and the market trades back up into those and sells off nicely. So those are all the examples of the main ICT concepts that I use. We can dive briefly into market maker buy and sell models just so you guys can see that visually as well. This is typically something I like to use on the lower time frames. However, you can see them form on really all time frames. You'll just see more of them on the lower time frames. So if we go ahead and drop into a 5-minute time frame, you guys will be able to see there is this portion of price action here that took place from basically yesterday and today, right? So I would be looking at yesterday as a market maker sell profile. I would be looking at today as a market maker buy profile. All this essentially means is it going to be a bearish day or a bullish day? And you typically want to identify this before the day's trading begins so you know which direction you're looking for trades in. So yesterday, you could see here that the market ran up and then sold off. All of this price action in here, because we're on a 5-minute time frame, if we drop lower even into like a 3-minute or a 1-minute, you'll be able to see it much clearer. But this is a market maker sell model. Right? So basically what you're looking for here is you have an initial consolidation, run up, smart money reversal, low risk sell, redistribution, and then basically the lows are taken out. So I would have been out around this point here. But again, you also have another market maker sell model that forms within the lower time frames. This is another one, right? You have a market maker reversal here. And then again, we're on a 3-minute time frame. So somewhere probably in here, you have a low risk sell opportunity, redistribution, and the market sells off, making a new low before consolidating and forming a market maker buy model. So here we have a market maker reversal, and then you can see the market kind of chop sideways, reaccumulation, and where are we targeting? Yesterday's high, which the market kind of consolidates and goes sideways once it does that. So again, those are brief examples of market maker sell model and a market maker buy model. Keep in mind, this is very complex. I can go super deep into this stuff because even just the two that I showed you, there's multiple market maker buy models and market maker sell models within that. And it really takes some time to kind of start seeing that on your own. But ultimately, you just want to understand that a market maker sell model is basically going to be a bearish day unfolding, and then a market maker buy model is going to be a bullish day unfolding. That's how I typically look at it. Again, these are just things that are a part of my trading plan, and I don't always use them every single day, but it also adds additional confluence in terms of the setups and the trades that I'm taking. So these are just a few concepts that I personally use. Hopefully you guys found massive value in this video. If so, drop a like, drop a comment below. Make sure to subscribe to my channel and turn on the post notification bell. That way you're notified every single time that I upload. I really appreciate you guys watching, and I'll see you in the next one.